Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield here on the Rural Radio Network, and another interesting week because there hasn't been a lot happening. Now, we just kind of seem to be stuck in this pendulum that is swinging from one direction to the other. We'll talk about some of the things that are affecting the trade, including what's going on in the rail, the back off of COVID issues with China, and the things that they're seeing within just the people within their country. We'll also take a look at the kind of the four things that are kind of watching, whether you're on either side of the fence of these markets. It seems to all be the same story across the board. We'll be back with that and a whole lot more in today's episode.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. Joining us, you can see Brian Splitt. He's with agmarket.net, and Heather Ramsey with the ARC Group. And kind of an interesting, we wrapped up the month of November, and I just wanted to first of all kind of just take a look back. As you look at November, maybe some of the key things that you guys thought of. And Brian, we're going to start with you. What kind of caught your attention during November?
Well, I think just to start, we had corn down just about 30 cents for the month. Some of these wheat varieties, Chicago wheat down just over $1. Kansas City wheat not quite down as much. A lot of that just because of concerns still about the dryness in the hard red growing regions. And actually soybeans were up 50 cents for the month. And so we had a little bit of deviation between the oilseed and the grains. A lot of that driven by the extension of the grain corridor in mid-November, and they extended that for 120 days. So that'll be up for discussion again in March. And, other than that, we've seen a tremendous amount of volatility come out of the options. One of the positions that we've had on for the last couple months has been corn straddles that were sold when volatility was in the mid-30s, and now they're down below 20% for these March options. So probably not a time to be short options at this point because of the drop in volatility. Probably better to be owning options to back up any major decisions that you're making at this point.
Heather, for you, what was kind of the catch for you for November?
I'm going to kind of switch a little over to some of that cash market discussion. Brian talks about options and those kinds of strategies. We have a lot of activity in the cash market, and in our neck of the woods, we had premiums hang on a lot longer and be just as volatile sometimes as what futures and options were doing on that basis side of things. We were able to take advantage, I think, of some prices that we've never seen for that time of year, or not even come close to in about 10 years. So we had an opportunity there, even though the futures were moving around and jockeying around for position during the month of November. We had tremendous opportunities on basis values on both corn, and then starting to pick up on soybeans towards the end of the month there a little bit as well. So great opportunity for clients to go through that harvest process and kind of figure out where they were sitting from a physical standpoint, either on farm or if they'd gone to a commercial facility there, and really get after a cleanup standpoint there. Just a lot of numbers that, like I said, we've not seen in at least 10 years or more in that time frame. And so it was a good opportunity to get ourselves back to a position and know exactly where we were at from a cash standpoint. And so there was a lot of clients that took advantage of that. A lot of farmers that moved grain or sold it to be moved, I should say, during that time frame. Since then, it kind of feels like the tail end of the month, we've had a little bit of a cooling off period here for a lot of different reasons, a lot of headline reasons kind of coming into that cash market as well.
Well, there definitely has been a lot of headlines that have been affecting the trade. So let's start with one of the biggest, and that has been something that you and I had a conversation, and I know Brian and I have talked about it as well, and that's been this railroad. Give me your spin, Heather.
I think in general, it's in everybody's best interest if both parties can come to terms on their own. I think that's everyone's takeaway, is that benefits the entire economy if both sides of this equation can come to terms on their own. However, there's a lot more grumbling that is not a decision or a compromise that would be reached easily. or in the near term is the fear. So just this week alone, we have Congress talking about different bills they're trying to get through the House and the Senate to make sure that we avoid a strike. I mean, we all know that a strike ends up being a huge financial burden for the entire economy. So, avoiding that seems like it's in our best interest. I will say that this fear, this anxiety over what kind of agreement is reached is definitely affecting our basis values in the cash market. It's definitely affecting, rail values and rail availability. The domestic pipeline has got to shift a bunch of grain from one central location or a couple of central locations out to several that have had a deficit over this last production window. And so having a rail issue puts much more hiccups than just dollars, out on the table. It's a true complication of, can we feed the areas that we need to feed if we can't move grain? So there's a whole lot of things on the table. It feels like most everyone in the industry is leaning towards there being an extension to the cooling off period. But having Congress come in this week and talk about being willing to step in definitely adds a little bit of heightened anxiety around what those conversations look like right now.
Well, Brian, there's been so much discussion about it from a Western Corn Belt perspective because of the PNW. Eastern Corn Belt side, is the rail as big of a frustration and worry for producers there?
Yeah, I mean, this is one of those things where, because of the severe deficit in the Western Corn Belt compared to the Eastern Corn Belt, we've heard trains going from Indiana, parts of Illinois out west to, as Heather mentioned, help feed into the deficit that we've got out west. So this is going to be something where, and I don't think the strike is going to come to fruition and be a long-term deal. Like Heather mentioned, I think everybody realizes that this is something that just be outside of the grain industry would impact everybody in the country. So I think the politicians are going to do what they think is right to avoid it. But for the producer in the Eastern Corn Belt, that would be something that, again, would be impactful on their basis values. Because this is something that, because of the deficit in the Western Belt, is going to pull grain from areas that it wouldn't normally come from.
The pendulum continues to swing. Some knee-jerk reactions within these markets. It's no longer gone day to day. It seems like week by week overall for these grains. What are you thinking and the conversations you're having with your customers, Brian?
So really the focus lately has been, we kind of moved on from the grain that we were going to sell out of the field or shortly after harvest. I know Heather mentioned the very strong basis levels, and those are very attractive. And so now the focus is to the producer of, hey, you guys are going to plant the most expensive crop that you've probably ever planted in your career. And what are you going to do to protect that? Because really the board does not care whether you make money on your crop or not. And we've seen that in previous years where grain prices trade below cost of production. And so our focus has really just been trying to implement strategies, whether it's doing some HTAs or some future sales in both corn and soybeans to at least provide enough income to pay for inputs. Maybe we're looking at some option strategies to provide floors. But by and large, you have to take some action here, especially if you've locked in some inputs at these levels.
And Heather, you've talked about that too. Those four things that seem to go up and down at the same time are causing for some conversations with your folks.
Yeah, I mean, my best advice that I'm hoping everyone's listening to is to not make some crazy knee-jerk reaction just because the market is doing that. And to Brian's point, cover your risk. Truly, that is the most necessary thing right now. He talks about it being the most expensive crop we've ever farmed, which I kind of chuckle because I'm like, we said that last year and here we are saying it again, and it just continues to climb. And at some point, we have to decide where to protect ourselves and when to do that, how to do that. The strategies are different between whether you're a consistent irrigated farmer or you're a dryland farmer. They're not, they're not apples to apples. We have to use different means to get there to leave everybody as comfortable as possible, but as protected as possible. And so part of that discussion and decision making is just making sure that these are consistent and solid decisions, not these knee-jerk panic moments because the market has done something wild today, because it could very well do the opposite wild thing tomorrow. And that's what we've seen a lot of. So I totally agree with what Brian's saying as far as like get some risk covered know where you're at, start making decisions into next year. I have said this numerous times over the last couple of weeks. I refer to 22 crop as old crop because it's old. And I'm looking forward to next year and trying to figure out how we make those numbers work. Because, to his point there, you can look at the 23 numbers right now, and one of those numbers actually pencils and works, and the other one does not. And the market doesn't care. It truly doesn't. We don't price a market around a farmer's cost of production whatsoever. That's never been the driving factor. So we have to take some risk off the table and protect ourselves. We can't just wait around for hopefully the market to figure that out at some point.
Well, we've got about a minute or so left here on today's program. Both of you, I want your thoughts on Chinese influence, especially with COVID. Heather, first to you.
They continue to talk about increased COVID numbers. That's going to continue to weigh heavy on the economy over there. From an export standpoint, we heavily rely on Chinese demand to really bolster those export numbers. And, if they have a slow economy, then that's going to hold us back for sure.
Brian, what are your thoughts on COVID in China?
I think recent developments with the protesting and some of the rhetoric right now, them mentioning that the current strain is less viral or virulent than previous variants. It seems to me like they're maybe actually moving closer to moving away from the zero COVID policy. So for me, my concern with China is more relative to the South American crop upcoming. And I know we've had a little bit of concern about Argentina dryness, but I think Brazil's the main story. And if we have a big Brazilian soybean crop, I'm concerned that our exports to China are going to drop off a cliff here in early 2023.
Some good things to think about. I appreciate both of you joining us this week.
Thanks, Susan.
Thanks, Susan.
Joining us has been Brian Splitt with agmarket.net and Heather Ramsey with the ARC Group. We always remind folks commodity futures and options involve a substantial risk of loss not suitable to all investors. And that's been the Nebraska Soybean Board Weekly Market Roundup right here on the Rural Radio Network.